Hey traders, Kill Stokes here, Chief Currency Analyst at TradingPower.com, and thank you once again for joining me for another weekend review video. I was digging through the stats this week on the YouTube channel, and well, I've seen that this has slowly become one of the most popular trading-based videos on the web. And well, I owe a big thank you to you guys. Every week, you guys come out and support, you share, you like, you leave positive comments, and I just appreciate you going through this journey with me and allowing me to grow. And that goes for you guys that have been with me since the the I Am Business website, before I was making money trading, back when I was just struggling and sharing my difficulties with you. So I appreciate it. Keep it up, guys. Let's grow this thing together. And I just love being here each and every week to share my journey with you. Now, for you guys that have been with me for a while, you've noticed that over the last few weeks, really about the last 3 to 4 weeks, I've been having a difficult time trading. It's really been a battle. The markets and we've been fighting back and forth. I've been winning some, losing some, and really just suffering from an extended drawdown period. Well, I'm happy to share with you guys that starting last week and into this week, I'm not completely out of it yet, but trading has begun to turn around. I'm starting to find my groove once again. I had a pretty good trading week, had some very good wins, and even the losses that I had, they weren't bad losses. And what I mean were that there were losses where I was stopped out by maybe a few pips and then the market would roll over in my favor. Now, just as I discussed with Dale Pinkert from FX Street in this week's interview, they stink. Those are some of the roughest losses you can take, but putting a positive spin on thing, it is good to see that your prediction and your analysis was right. You were just a little bit off on the execution of the stop loss. And, you know, it's going to happen. It stinks when it does, but it's going to happen. So the best you can do is put a positive spin on it. So I want to start off this week by sharing with you a trade I took in the live room. It was on the dollar yen. And I thought this trade was important to share with you guys because it really shows the process of what we go through. Obviously, I had to chop it up to save time, but what we did on the dollar yen is we used our top-down analysis, working all the way down from the daily chart to the 15-minute chart, and really turned what looked like an okay trading opportunity, something that I wouldn't take by itself. We went ahead and used the skills that we learned to take that okay trading opportunity and turned it into something that we can actually execute, and ended up making ourselves some pretty good profit. So sit back and enjoy this recap video from our live trading room. And again, focus on the process of the trade and not the actual result. There we go. Let's go down to 60-minute chart. 60-minute chart, you can see a double bottom here on the 60. Boom, boom, double bottom, RSI divergence here. Bang, bang, for you double bottom traders. Maybe an ABCD pattern completion. A little short, I suppose. No, look at that, ABCD pattern completion there. What do you know? So you've got ABCD pattern completion, you've got double bottom, you've got Fibonacci influence. For you CTS traders, you're looking at a score of 2, 3, 4, RSI oversold, 5, RSI divergence, 6, CTS score of 6 right now. We do not have structure looking left. We got no type of structure looking left, but Kenny says we have a 2618 on the 15-minute chart, which indeed we do. You see the double bottom here. Yeah, let's I think it's a good buy. Let's buy it up. George says 123.70s. Yeah. So a few ways you can look at this. You can look at this as an ABCD pattern. If you're a traditionalist, the traditional targets for an ABCD pattern, we're looking for a move back up into a 3D2 for target 1, a move back up to the 618 for target 2. You can see both of those levels come into structure as well, which is good. Your 618 structure is right here. Your 3D2 structure is a little bit above, or your 3D2 is a little bit below the structure level right here. I think those are good structural levels. Your 127 extension comes in right below those levels as well. So, yeah, I think all of those are good areas to look for secondary targets at. So we'll see how it goes. But a very good example of finding a CTS score on the higher time frame, and this is a perfect example of this. What was the problem? Put yourself in my shoes. What was the problem I had with this trade on the 60-minute chart? What was my issue? What was my major concern with this trade? Right? It looks good. It's a ABCD pattern. We've got RSI overbought. We've got a double bottom. We've got some Fibonacci confluence. We got a CTS of what I say of 1, 2, 3, 4, 5. CTS of 6, which is well in the range of a quality CTS score. The problem was lack of structure, right? For me, and again, I repeat, for me, structure is a key part of my philosophy. It's not, I like using fibs as tools. I like, using harmonics as tools, but structure is really big for me. Now, so, one of the lessons I learned in the past is that if I take every single ABCD pattern, or if I take every single double bottom, I'm going to lose money pretty quickly. So what I did was I identified this. I said, hey, this is a trading opportunity that I like and meets my rules, but I don't have enough there. Go down to the lower time frame, 2618 trade. A little bit of more confirmation, a little more confirmation. Not only do we have the double bottom there, but we have the break and close above structure, the retest. We got a pretty deep retest too. And we'll see if this holds. So good find there, Kenny. Good find there. All right, guys. So I hope you guys enjoyed that video. And if you have the chance, join me in the live room. It's free for 1 week. Just go to our website, www.tradingpower.com. Go ahead and hit that Forex Live trading room thingy, link, button, whatever you want to call it, and start your 1 week free trial. One of the best things about my live room isn't just the community that we have in there. We have a great group of traders, but it's about the repetitions you get. Being a professional trader is very similar to being a professional athlete. The more you practice, the more you see, the more film you watch, just doing it over and over again, repetition after repetition after repetition, the more of that you can get in, the shorter your learning curve gets. So definitely, even if you're a longer term trader, which I started out as, going down to the lower time frames and seeing these type of retracements, seeing structure, seeing double tops, double bottoms, seeing the same things you'll see on the higher time frames, times 5 on a lower time frame, just allows you to get more opportunities and more reps under your belt. So go ahead and check it out if you have the chance. Now, speaking of professional athletes, there's trading and professional athletics are very similar. I'm actually working on a book right now comparing the two. Now, before you get ahead of yourself, I'll tell you this, I'm probably never going to finish the book. I just don't have a lot of time to write it. I usually only get time to write when I'm going out of town. My next trip isn't until August, where I'm going to Vegas, and there may not be a lot of writing on that trip. But there are some interesting comparisons between the two. And one of them is really just with the mindset of a professional athlete. I heard a great conversation this week on ESPN radio. I think it was the Colin Cowherd show, where he was comparing different NBA players. And he said there's 3 types of athletes. There's athlete number 1. Checking the trade at the same time. There's athlete number 1 that is born with, great genetics. They're born with this natural ability to be great at their sport, and they don't really work on it on practice, and they end up being okay. There's athlete number 2 that wasn't blessed with the ability to run fast and jump high, and they're short and stocky and just not maybe fit for that sport, but they work their behind off in practice and make the most out of the skill that they had. And those athletes end up having very, very good careers. Again, they never become superstars, or not a lot of them become superstars, but they have quality careers. Then there's athlete number 3. Athlete number 3 is a combination of both. They're born with certain genetics. They're tall enough, they're long enough, they can run fast, they can jump high. And they also work their behinds off in the gym. They practice and get the most out of their ability. And those are the ones like Michael Jordan's, Cristiano Ronaldo's. Those are the ones that go on to be the greatest athletes in the world. And trading is no different. Yes, there's no gene that makes you a good trader, but some people are better, just have an artsy type of view where they can see things clear. Some people are more analytical, where numbers make a lot more sense to them. But at the end of the day, it's how hard you work is going to determine how good you are as a trader. So it's important not to have that fixed mindset where you settle. Okay, well, I'm okay. I'm here now. My system is working. I'm just going to settle in and be okay. It's very important that you always work on striving to get better. And I wrote a great blog post about this on our website. Go over to our homepage. Go to what mindset do you have? I'm not going to recap the whole thing.
Can you hear me?
Yes, hi, Akil. Nice.
Let me shut the video off. I'm not going to recap the whole thing for you, but give this thing a read. It's really good on the mental side of trading. And as we all know, psychology is the deal breaker in this profession. But I do want to read you this quote by Mike Bellafiore. He said, where's it at here? He said, "Some might think that I and people like me have mastered the trading game. I haven't. I never will. This is impossible. You must get better every day. Trading is a sport of survival, reinvention, and perseverance, even for the successful trader." And I've talked to you guys a lot in the syndicate and more so in the live room about how I always, and Jason Stapleton as well, we always do continued education. We're always attending webinars. We're always taking training courses. We're always reading books or browsing the internet. Are we looking to change how we trade, our system or strategy? No, but we know that the more information we have, the more knowledge we have, even if we can't directly relate it to how we're trading, is a benefit. And we always want to get better. We never want to stay in the same position, because the minute we do that, someone like you out there is going to pass me, which you should be trying to do. And it should be my job to kind of outrun you. And that's how we both get better. A perfect example is this week. We had, I don't have the quotes in front of me, but I'm sure I'll load them up on the video. We had big news out of New Zealand this week. We had an interest rate decision. And I told the traders in my live room, guys, be careful. You want to stay away from these New Zealand pairs because, well, they're expecting to cut rates. If they cut rates, although it's already priced into the market, we should see a big reaction. And if they don't cut rates, I think we'll see an even bigger reaction. And lo and behold, when that announcement was made, I think the market gapped almost 200 pips for some of you guys. It depends on what pairs you were in. But I did get some emails from a few traders I work with talking about it. And again, it's part of that knowing the information. No, I don't trade off of fundamentals. But if you've been following me in the live room and in the 12-week transformation for the last few really years now, I've been making a great effort to just build my knowledge of fundamentals, build my knowledge of economic events, what's happening, understanding why, what effect does it have on the markets, and really what announcement, what moves consistently, or what news I should say, consistently move the market. Because although I may not be trading based off of it, I can certainly use it to help either tighten up stops on my position or know when to stay in or stay out of a particular trade. And this is one of them where we, saved myself some money potentially by being able to understand the importance of this news event and stay on the sidelines for it. So I did think that was an important point. A few of you sent me emails, so I did want to address that. Lastly, let's talk about money management. I received last week in the video, and actually in the interview with Dale Pinkard for FX Street, I told him that, hey, I look to get a 3% return each month. If I can average 3%, and if you as a trader can average 3% a month, you're going to be in line with one of the best traders out there. Hedge fund traders are going to be doing backflips over that type of return. If you talk to most professional traders out there, they will tell you the same thing. However, there are a lot of people on the internet that don't believe that. 3% seems like a low number. It seems unrealistic. Got a comment from a guy on that video that says, hey, Akil, I make 3 to 10% a day or something like that, or a week. And if you do that, that's great. Hats off to you. I'm not here to say that you're a liar. I'm not here to say that you don't. I'm here to say, well done. Keep doing it consistently. That's great. But for you guys that do make a smaller consistent amount like I do, I just want to show you what 3% actually looks like over time. Now, I threw these numbers into a spreadsheet. It says Liberator. That's I just used the spreadsheet for this, but here's a look at, these are live results actually. Here's a look at results over a 2-year period. And you can see on this equity curve, and this is averaging about 3%. A 3% return took a trader that uses a $10,000 account all the way up to, close to a $19,000 account. So about an 85, 84% return on investment just based on averaging 3% a month. Again, you can do the math. 3% a month, you're looking at what? 36% a year, and you do that year over year. You slowly start to build your account. Now, the key is what makes it even better is when you add I'm sorry, my camera froze on me. What makes it even better is when you add money management to the equation. Money management makes it even better. And you can see, I'll make this quick. If I go over to my Delta here and I take this $10,000 and let's say I change this to a $5,000 Delta, I mean, I'm compounding my money, I'm increasing my position size as my account grows. Well, now on this right-hand column, you can see that 84% just turned into 102% return on investment, turning $10,000, instead of turning $10,000 into $18,000, $10,000 is turned into $20,000. And of course, the more aggressive you get with this, the bigger that return is. You could do a very aggressive Delta, and now you've got 143% return. You can see the smaller blue line being no money management, the light blue line being money management. So it's don't be too quick to turn your head on 3%. It ends up being, if you can do it consistently, and again, keep those drawdowns to a minimum. You're not having 10, 20% drawdowns that screw up your equity curve. It's amazing what a small return like that can do if you can do that on a consistent basis. All right, sorry about that. A little technical difficulties at the end, but I want to thank you once again for supporting me with this video. Please do these 3 things for me. Hit that like button. If you're not subscribed, go ahead and subscribe to this channel. And lastly, share this with a friend. Share it on Facebook, Google, Twitter, YouTube, wherever you can. There are a trading view. There are a lot of traders out there that are lost and they're learning the wrong thing. Bring them to a place where they can learn the right way. And by right way, I don't mean the right style to trade. I don't care if you trade technical analysis or patterns or harmonics, fibs, CTS, whatever. But I want them to learn the mindset. And from the comments that I read, I've done a very good job of just letting you guys see what the reality of trading is as far as the ups and the downs and the mental battles that you have to go through. So please do those 3 things: like, subscribe, share. The wife and I have to go to a charity event, and then I've got a race to run a little bit later. So hopefully I can get this thing out to you before tonight. But before I leave, I want to do one more thing. If you are from the Netherlands or from Germany, I want to apologize. You ran into a buzzsaw. Unfortunately, our U.S. men's national team cannot be stopped right now. And yes, it's not a World Cup year. Yes, you guys are not really concerned with these friendlies and playing your B squad. But just like my post on TradingPower.com said, celebrate all wins. So I'm going to celebrate these 2 European victories, beating the Dutch and beating the Germans all in 1 week. Guns, fireworks, trucks, apple pies, America. I'll see you guys next week.